Number one are known as direct tax. The tax is on your salary or on your income, known as direct taxes. Okay. Then you have what comes into the heading of direct taxes. The first one is income tax, paid from an individual income. Disposable income is the income left after deducting income tax from it. Got my point? When income tax rise, there is a little disposable income or spend on the goods and the services, so firm will face lower demand and sales and will cut production. Simple means that you have a disposable income. What do you mean by disposable income? The income you receive after the deduction of the taxes. If your disposable income will increase, you will buy more products, and if you buy more products, mean organization need to produce more products. Okay, they need to produce the products more, and if they wanted to produce more products, mean they need more employee. Then employment rate will be high. If your disposable income will be decreased, you won't buy any products. Okay, then what will happen? The organization will produce less, and if they will produce less, then they don't need any kind of employees. Then unemployment will increase, and ultimately the inflation will increase. Okay, this is known as income tax. Then you have corporate tax. Taxes on the companies or the company's profit or the firm's profit. When the corporate taxes increase, business will have lower profit. Just make a sense, Shariz. If corporate tax will increase, business will have lower profits and thus will find it hard to expand the produce more. And they won't be able to produce more. What will happen? They don't need more employees. Unemployment rate will be increase, ultimately inflation will increase. Getting my point? Then capital gain tax. Tax on any profit or gains that arise from the sale of assets held for more than a year. Inheritance tax. A tax on inherited wealth. For example, if you have a land, after 1 year you have to pay the tax. You have a car, you have to pay the tax. Getting my point? Property tax, same. You have a home, you have to pay the tax. In Pakistan, if you have a home at let's say one canal or more than one canal, you have to pay the tax. This is known as property tax. Okay, what are the advantages? Same advantage: high revenue, reduce the inequality. Disadvantage: reduce work incentive, reduce enterprise incentive. Getting my point? Then we have indirect tax. Taxes on the good and services sold. It is added to the prices of the goods and the services, and it is paid while purchasing the good or the service. It is called indirect because indirectly takes money as a tax from the consumer expenditures. Sometimes, Sharice, you go to the mall and you are going to purchase a shirt. For example, the shirt price is 1000, but you have to pay, let's say, 1300. Why? 1300 is the selling price. It's a sale price. So ultimately you will receive from the consumer. Getting my point? This is known as indirect tax. Then GST. Maybe you heard this name, GST. These are included in the price of the good and services. Increasing these indirect taxes will increase the price of the good and services and reduce the demand and intense profit. Reducing these taxes will increase the demand. Custom duty include import and export tariffs on the good and services flowing between countries. Getting my point? Anything you are going to sell out of the country, you have to pay custom duty. And if you are going to buy something, you have to pay custom duty. You can't buy a car by sitting over here. If you want to buy a car, let's say from Chinese car you wanted to buy, you have to pay custom duty. Then excise duty. Tax on the demerit goods like alcohol and the tobacco to reduce its demand. Now you are going to pay excise duty. Then progressive tax are those taxes which burdens the rich more than the poor. In that the rate of taxation increase as income increases. For instance, an income tax is the perfect example of progressive taxation. The more income you earn, the more proportion of the income you have to pay in the taxes. Getting my point? For example, at the moment in Pakistan, if you have a 50,000 salary, maybe you have to pay 1,500 tax. If you have, let's say, 90,000, you have to pay 2,500. If you have a salary of 1.5 lakh, then you have to pay 5,000. So, what do you mean by the more you will earn, the more you will pay tax? Getting my point? This is known as progressive tax. Other one classification of the tax is regressive tax. Are those taxes that burden the poor more than the rich. In that rate, taxation falls as income increase. And in indirect tax like GST, an example of regressive tax, because everyone has to pay the same tax when they are paying for a product. For example, if you are going to buy a shirt, they said you have to pay GST, for example, 1300 sale price. So the original price of the shirt is 1000, but if you add the selling tax, now you have to pay 1300. That would be easy for you to pay because everyone have to pay the same price. Remember the person who is saving his money, okay, let's say for a 5 month, he took a 5 months to save 1000 rupees and asked them to buy a shirt, okay, and now you are again ask him to pay regressive tax or the GST tax. Will it be possible for him to pay? It will be hard for him to pay. Okay, so this is known as regressive tax. It is more burdenized on, you can say, poor people. Then proportional tax are those taxes that burden the poor and the rich equally. In that rate, the taxation remains equal as income rise or fall. An example of in corporate tax, all companies have to pay the same proportion of their profit in the tax. For example, if the corporate tax is 30%, then whatever the profit of the two companies, they both will have to pay 30% of their profit in the corporate tax. Getting my point?